And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to, well, it's the week before Christmas. That's right, right around the corner. Of course, this is the last light trading week before we get to the Christmas break. And then, of course, come back from Christmas, it'll be the sprint into the end of the year. And thank goodness we get 2022 behind us. Hopefully 2023 will be better. We'll see. Lots of stuff going on over the weekend, though, between markets and other various things. Of course, the headlines this morning everywhere. Elon Musk ran a poll over the weekend asking if he should step down as CEO of Twitter, and he would abide by the results of the poll. So the poll is now closed. 57.5% of the voters voted yes, he should step down as CEO of Twitter. However, a forthcoming recount of the vote will determine that 10% of those were bots, so he'll stay in charge of Twitter. So, I'm guessing here. We'll find out what happens. But yeah, so we'll see. There was definitely an election manipulation by the bots. So we'll see what the outcome of this is. However, here's the interesting part of the story. He said, now this is the interesting thing, right? So he buys Twitter, takes it public. So he owns the company. He can do whatever he wants, right? I mean, it's his company. And, but he has been smart enough to realize that he's a very polarizing figure and it's now affecting his other businesses. Of course, we talked about last week, a lot of the people who bought, Teslas from Elon Musk are now trading them in to buy other stuff because, well, he doesn't match their values anymore because of what he's doing with Twitter, putting it back on free speech, this type of thing. So since he doesn't abide by their policies, they're getting rid of their Teslas, talking bad about the company. The company's been dropping in value. So he recognizes that he's too polarizing of a character, much like Trump was, a very polarizing character that kind of divides the users between right and left. And that's not great for the company. And I think he recognizes that. So he says, okay, I'll step down. Well, you need a CEO to take over for him. And here's the interesting statement that he makes. He says, there is no one that has a plan to make Twitter grow that wants the job. There is no successor right now for the CEO position at Twitter. So, hey, dust off your resume, start sending it to Elon Musk on Twitter. Say, hey, you're available for the job. We've got a CEO position available for somebody who can make Twitter profitable. That's going to be the interesting story, right? How do you make the company profitable? Well, there's only one way that you can make social media profitable, right? Charge users for their usage, right? How many people will be willing to pay to be on Twitter? Would you pay $2 a month, $5 a month, $10 a month to be on Twitter, right? How valuable is it? This is the interesting thing about social media, right? Facebook, etc. It's all free to use, right? Because how do they capitalize on your usage, right? They sell you product. It's advertising. So that's the other model. You got to get the advertisers back. A lot of advertisers left, Twitter after he took over and started promoting this fact that this is, he's going to get rid of censorship and allow for free speech. They didn't like that, so they left. So ad revenues dropped sharply for Twitter. So you need somebody that can come and bring those advertisers back to the company. That's going to be the challenge. How do you balance that free speech moniker of Twitter being the town hall, the town square, right? And appease a lot of these companies that are more of the woke virtue signaling companies that have pulled advertising from Twitter. How do you get those guys back? That's going to be the question. So, it's going to be a very interesting situation for Elon Musk, particularly since he spent $44 billion buying this company. Now, personally, he didn't put that much in. I think he's got it right around 30 billion. I don't know the exact number, but he's got around 30 billion. I think he had 12 to 15 billion in loans from banks like Morgan Stanley and others. So there is a reasonable risk now that Twitter goes into bankruptcy. We'll see what happens. But it is an interesting conundrum for him, right? What do I do? Do I stay in charge of Twitter, try to make it a viable company, or do I go back to running Tesla, which, by the way, Tesla stock is down about 60%-ish this year. and losing market share, of course, because other electric car companies are coming online. GM, Ford, others are bringing out cars and taking market share slowly away from Tesla. Even though Tesla is selling more cars than they were before, they're losing market share because of other competitors. And that was inevitable. That was always going to happen. So, Elon Musk has a choice to make. Do I run Tesla, get it back on track to making money and being profitable, continue to innovate the electric car industry? So I got SpaceX to take care of, and now I've got Twitter to deal with. So I need somebody to come run Twitter. So again, if you've got an idea about how to make Twitter successful, send Elon your resume. A lot of kids in college right now need a job. Friday, of course, markets sold off. Now, we've been talking about this here for a bit, that markets were going to sell off. And the problem that we had, of course, as we were heading into the first 2 weeks of December, back in November, I kept repeating, hey, first 2 weeks of December tend to be sloppy, tend to be weak, be careful. The last 2 weeks tend to be a lot better because that's the end of year window dressing. Well, here we are. Last 2 weeks of December now coming up, and markets did sell off very nicely last week. We gave up all of that CPI gain. Of course, a very hawkish Fed caused the market to sell off. Friday, we actually broke below the 50-day moving average, testing the bottom of that on Friday this morning. Markets are going to open up a little bit this morning. We'll see if we can get some follow through. S&P futures are up about 9.5 points right now, so not a real strong open, but a little bit of a positive open after 4 days of selling. Not surprising, get a little bit of a bounce here. The two issues going on, very light trading over the next few days. Basically, all the traders are gone. They're out for the holidays. In fact, Brent and I are going to be gone. What day are we leaving? We're going to Grandma's house when?
We're going to go out Wednesday. Wednesday morning we go to Grandma's house.
We're going to Grandma's house on Wednesday. So Grandma's house
See you
on
next
Wednesday?
year.
Exactly. We'll be, because Grandma makes the best cookies. So we're going to hang out there at Grandma's house, eat cookies, be back next year. But everybody's leaving. So light trading for the rest of the week here. This is where potentially we got oversold enough last week. In fact, in our newsletter, we in our market sector analysis that we publish in our newsletter each week at realinvestmentadvice.com. If you look at that, every major market and sector is pretty much oversold for the most part. So that gives us an ability to have this kind of reflexive Santa rally. So that's the good news. The bad news is, of course, the MACD signal, sell signal still intact. That suggests that any rally we're going to get is going to be somewhat limited. But it's probably a reasonable trade, right? If you want to try to pick up a trade here, like buy some S&P 500 index or whatever, there's a reasonable trade to be made here over the next week or two heading into the end of the year. Now, there's no guarantee it'll work, right? Just markets are oversold enough here on a couple of different fronts that you could get a reflexive rally, which might get you back up into the, the 3,900 to 3,950 range. Get back up here, start trying to test this previous consolidation range that we were in. And this is really kind of the big risk, for the markets here over, of course, the next, really few weeks, is that we had this very broad consolidation range that we were trading in going all the way back to the beginning of November. We broke that to the downside. So the risk here is, of course, that is now going to be pretty major resistance for the market to try to get back up into. So, kind of think about a ceiling overhead and trying to go from the floor you're on to the next one. You got to get through that ceiling. That's really the challenge the markets are going to have here. But again, light trading volume, a lot of capital needs to be put to work by the end of the year. So there's certainly the fuel here for a decent rally, and really not a lot of news left between now and the end of the year. So, you can trade it carefully, but be careful. We talked about raising capital, raising cash levels and reducing equity risk, for the last several weeks. That turned out to be good advice. But now, you've got a tradable opportunity into year end. All right, that's segment. We'll be back. Got to talk about SBF requesting extradition back to the U.S., and I'll tell you why he's doing it right after we get back from the break. RealInvestmentAdvice.com.
Get daily investment news you can use, delivered at the speed of the internet at RealInvestmentAdvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Brent, let me ask you a question. Well, welcome back to the show, by the way.
Oh, thank you.
It's a Real Investment Show this morning. So, Brent, let me ask you a question. Why do we send people to prison?
Oh, it's a corrective measure.
Right. So, so supposedly, if I send you to prison, then you shouldn't do that. Whatever you did before, right? You committed some crime. You killed somebody or robbed something.
Contemplate your sins and correct your behavior.
Correct your behavior. Correctional facilities, right?
Mm-hmm.
And what's interesting is that when people get out of prison, they typically can't get a job, right? People have a tendency not to want to hire a criminal.
Convicts.
Convict, yeah. Why were you convicted? Because I robbed a store, right? Mm-hmm. And you're applying for a job at a retail store.
Ain't going to happen.
Yeah, probably not going to happen, right? So it makes it very tough. And so you have a lot of, recidivism rates in the U.S. are 68%. So basically 2/3 of the people that get out of prison wind back up into prison because essentially they go, it's really not that bad. I got cable TV. I had a library, got to work out every day,
3 squares.
3 square meals, right? That's, it's not terrible in U.S. prisons, right? But maybe that's the problem. But maybe therein lies the problem is that, we've gone for, decades, improving the quality of prison life because if you're in prison, a lot of concern about mistreatment of prisoners, et cetera. And, we need to make things better for people in prison so that they get access to the internet, they have television, they're in prison, but we need to make things fairly, decent for them, right? We need to be human beings and treat them with a standard of human dignity, regardless of their crime, right? Pedophiles, murderers, whatever. It doesn't matter what the crimes are. We need to treat them a level of human dignity. Now, why am I telling you this? So, I used to, back in my earlier life, I traveled around the world and I lived in a lot of different countries, and prisons in other countries are not like the U.S. They're terrible places, horrible places. When I lived in Spain, a good example, guy got arrested and thrown in prison, and they weren't even sure if he had committed a crime or not, and they threw him in jail, and 6 months later, they figured out that he didn't actually commit the crime, but he'd been in jail this whole time. And of course, when he left, he was malnourished and not in great shape coming out of prison. And they interviewed him, and he was talking about being in a Spanish prison and, days without any sunlight, no food on many occasions, rats and roaches, and just the most terrible of things to be in jail with, right? And of course, crime is fairly low in Spain for a reason. You don't want to go. And that's the way it is in a lot of countries, right? You don't want to go to a Turkish prison. Have you ever seen Midnight Express? I mean, that's all you need to know about prison. But the point of prison in other countries is it's not a place you want to go. And so crime rates tend to be lower because there's a consequence of bad behavior, right? So if you commit a criminal act, the consequence is terrible, right? And so you don't want to do that. And the reason I'm telling you this is because over the weekend, Sam Bankman-Fried, of course, now remember Sam Bankman-Fried with FTX. He's been convicted of various forms of fraud, wire fraud, money laundering, etc. The federal, I'm sorry, he's indicted.
He has on the world stage, but
yeah, exactly.
There's this thing called a court thing.
Yeah, we haven't been through the court part yet, so you're correct. He has not been convicted. But anyway, he's been charged with wire fraud, fraud, all kinds of stuff. In fact, federal prosecutors over the weekend saying that the fraud started in 2019 when actually FTX launched. I mean, so it goes all the way back to the beginning. Well, he got arrested by the Bahamian authorities and put into jail in Bahamas. And after 4 days in the Bahamian jail, he said, "Get me out of here. I want," and he's asking for extradition to the U.S. And let me just, this was from a news report last week. The Bahamas prison where SBF was reportedly heading is harsh due to overcrowding, poor nutrition, inadequate sanitation, along with cells that are infested with rats, maggots, and insects. Now, that's that prison. Versus he'll come to the United States and he'll go to Club Fed, where he'll have, access to color TV, library, internet, 3 square meals a day, clean cells, etc. Right? So it won't be too terrible. They'll probably get Martha Stewart's old cell.
On the wall, Martha was here.
Martha was here. It's still decorated. But, right, don't want to be in jail in another country. I mean, you go to Mexico, last thing you want to do is wind up in a Mexican jail, right? And so I'm not saying, and look, here's the point I'm making. We have a 68% recidivism rate in the U.S. for a reason, right? If you don't have any other opportunities, jail's not a horrible thing. That sounds like a terrible thing, right? It's like jails, you shouldn't want to go to jail. But if you're living on the street and you have no other opportunities in the world, jail's not the worst thing. And there's a lot of people that get into prison and they get out and they wind back up in prison again because they don't have another alternative. And, again, there's not a reason to not want to go back to jail, right? It's not such a horrible place. But it is interesting to see this happening. Maximum security. So this was more from the report. Maximum security cells for men measured approximately 6 feet by 10 feet and held up to 6 prisoners with no mattresses or toilet facilities. Inmates removed human waste by bucket. Prisoners complained of the lack of beds and bedding. This is according to the report. Some inmates developed bed sores from lying on bare ground. Sanitation was a general problem, and cells were infested with all kinds of insects. Overcrowding, poor sanitation, and inadequate access to medical care were problems in the Bahamas Department of Correctional Services and men's maximum security block. The facility was designed to accommodate 1,000 prisoners, but is chronically overcrowded. Don't want to be in jail in the Bahamas. So when you go on vacation to the Bahamas, behave yourself, or you'll be asking for extradition back to the U.S. So anyway, he's coming back to the U.S., of course, and we'll see how this is going to be a very interesting trial. He's already pretty much laid out his case in public, and this is something that we talked about previously, and he did an interview with the New York Times, and he did multiple public statements, released a statement that he was supposed to appear in front of Senate to give testimony. He released a statement basically outlining all of his mistakes, etc. Did the whole kind of simple Jack tour prior to his arrest, and have pretty much laid out most of the case for the prosecutors. So this is going to be an interesting thing. And of course, this will all be worth probably watching on a Netflix special, as soon as we get through Harry and Meghan.
This won't be the Darrell Brooks trial.
No, this will not be. This will not be.
My wife is
hooked on that thing. And I just have one thing to say about
Yeah.
Harry and Meghan, right? Have you watched any of this?
Not.
Okay.
Not a snippet.
So it's one of the most watched things on Netflix.
Really?
Right? Yeah. People are just really into this. But here's the thing about it. Meghan Barrett, and look, I haven't watched the whole thing, so don't know if I'm going to make it to the end of it, but I watched a couple episodes. But this is what I pulled away from this, is that, have you ever seen that show, like on I can't remember what station it's on, but these people will marry somebody from another country, and they have 90 days. It's called 90 Day Fiance, right? So
I haven't watched it, but I know about it.
Okay, so they want to get them a green card, so they meet, they fall in love online, right? And then they have 90 days to get basically married to get their visa to the U.S.
Yeah.
And so these American women will fall in love with some guy like in Nigeria or whatever, and then they get all upset because the guy wants them to change to their customs, right? You have to, whether it's wearing a burqa or following some, Muslim tradition or Nigerian tradition, whatever it is, and multiple wives. And then, of course, the woman gets all upset because it's like, well, that's not the way we do it in America. Well, you're married a guy from another country. This is what I took away from Meghan Markle is like, here you're this American girl who marries this prince, and now you want to change hundreds of years of the monarchy. It's
Not
like, well,
gonna happen.
in America, we don't curtsy. You do here. If you're going to get on the Titanic, act like you're on the Titanic. Go down with the ship. That's all I'm saying. All right. Be right back after the break. We got real stuff to get into.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
We're looking for our next house eventually, right? We're driving and my wife's scrolling on her phone and she goes, well, there's an open house over here in this neighborhood. So she's like, okay, turn here. And so I turn on the street and she's like, okay, well, turn here. And I'm like, babe, where's this house at? You're looking at the open house on your phone. That's just, well, I don't have my glasses. I can't see my phone.
The Real Investment Show podcast
I had spent like 20 minutes driving around with a blind person giving me directions.
at realinvestmentadvice.com.
My life is a soap opera.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday and the latest analysis from Lance Roberts and Michael Leibowitz. Just click on the show links at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. It's 6:33. Market's up about 10 points on the S&P this morning. Dow's up about 61 right now, trying to get a little bit of a bounce. Market's closed below the 50-day moving average on Friday, which, is kind of troublesome because, it's certainly not the position we wanted to be in heading into Christmas. But as we've said, basically nobody's around now. Between now and the end of the year, it's just inmates running the asylum. So with markets oversold here short term, the potential for a trade higher is certainly in a better position than it was last week. Markets are oversold short term. We've had a good bit of runoff in stocks. And so there's a lot of underpositioning in equities going into the end of the year that'll have to get put back on. But interestingly, though, people just really, at this point, they're just tired of hearing about the markets, right? It's just like, oh my God, just, can we just get the year over with? And that's really kind of where, we're getting to in a lot of cases. Just let's just get this year over with and let's, kind of move on. I don't know what next year is going to bring. Once we get into 2023, we're going to have to deal with the consequences of rate hikes, right? Recession, no recession, what's coming? Can we avoid a recession is going to be the big question. And, there's just a lot of concerns we have moving into the new year that we haven't really resolved yet. And so while I know we're tired about hearing about the markets now, I just don't see how it gets we kind of get back to the bull mode, early next year. Now, I think, and I said this on Charles Payne the other day when I was with him. I said, hopefully by this time next year, we'll be talking about, a bull market in equities. And hopefully we'll have a lot of this stuff behind us and we'll be back to more positive, action in the markets and back to making money. And so between now and then, it really just becomes a function of survival, right? Just surviving this period we're in and, getting us to the position to where we can start making money again. And we'll get there, right? It's just a function of time. But this is just one of those periods that we've just kind of got to grind through it. And it sucks, unfortunately, just the way it is. But we just kind of got to grind through this until we can get to the other side of it. We've got to factor in, all of these rate hikes, bring inflation back down, deal with earnings that are still elevated, so forth and so on. To be sure, there's been a very significant change in the macro sentiment and positioning this year. And a lot of investors are off sides. Very negative sentiment on many places. There's a lot of leverage that was in the market that has been worked out of the market, so that's good news, right? So from a lot of the margin that people were taking on margin debt, et cetera, a lot of that's been reversed. And, fortunately, one thing that has happened to help keep markets somewhat stable has been a massive rotation of funds out of active fund managers into passive ETFs. And as we've talked about before, the problem with passive investing is that it just fuels money into the top 10 stocks mostly. About 30% of every dollar goes in the top 10 stocks of the index because of market cap weightings. And so that's actually helped markets this year, this shift and these continued inflows into passive ETFs have actually helped mitigate what probably should have been a much deeper decline in the overall market that we didn't have. So there is some light to this as we move into next year. If those passive inflows do continue, it could help mitigate further substantial downside in the markets. Now, again, we can resolve valuations a couple of different ways. One, prices decline and earnings go up, right? Valuations come down. Another way that you can resolve valuation issues is earnings rise and prices don't go anywhere. And another way, of course, is that if prices do go up, earnings have to go up a lot faster. And don't really see that happening. But, we get earnings that maybe don't come down as much as expected. Maybe we do somehow manage to avoid a recession. Something else happens, Fed reverses course, starts lowering rates and doing QE, whatever it is. And we can get valuations down without markets having to decline substantially more. Now, this past weekend, actually on Friday, I laid out the valuation math going into next year. And look, targets range everywhere from 2,400 to 4,500. And I laid out 4 different scenarios of where markets could be next year based on valuations and earnings. Made some assumptions. But, that's the problem with where we are right now. There's so many different varied outcomes next year. It's hard to bet on just one. And this is one of the mistakes that I continue to caution you about. There's a lot of people running around right now and they're going, oh, well, this is going to happen and that's going to happen. So you need to be all in gold or you need to be all in commodities or whatever it is. Okay. And that's a very dangerous position to take because so many things can happen that will deviate from that outcome. Yes, there is a case for gold. If real yields start to perform better, gold should perform better because gold is a function of real yields. But what if inflation doesn't come down as much as we expect, right? What if inflation goes back up next year because of wages? There's things that could happen. So be careful with these kind of doom and gloom scenarios where this is, the end of the world is coming and you need to be all in a bunker, right? There's so many things that can happen that will keep that from happening. I'm not saying it won't happen, right? Could very well happen. But it's a much smaller possibility in the worlds of probabilities. So just try to keep a balance on some of these views. And look, there's a lot of views out there that next year is just going to be rip-roaring for equities. You should be long all the most risky equities, right? Small cap, mid cap, emerging markets, international. They're going to perform tremendously better next year, maybe. But if you have a global recession, maybe not. So that's the risk. What we have got to do is we've got to kind of just wait a little bit, be a little patient, and instead of making bets based on expectations, allow the market to tell you where to put your capital to work. Now, there's some obvious bets out there that you go, well, where things are right now, I think a weaker dollar is probably a likely outcome, but there's things that could make it get stronger. Yeah. So just be careful. Let the market tell you where you need to invest. Yes, you're going to miss the bottom, but missing the bottom is better than making a bet that is wrong and getting trapped in the wrong trade, hoping to get out of it, which is what happens to most investors. Part of my lack of excitement right now about getting engaged in risky assets at the moment is the unknown outcome of the Fed policy. Right now, again, this is another one of those things. I mean, we can look at Fed policy and say, you've just gone through the most aggressive rate hiking campaign in history, for the most part, since the 80s. And we haven't even witnessed the outcome of those rate hikes yet because of the lag effect, which will have an impact on risk assets. And the problem is we don't know what that outcome will be. Will it be a soft landing scenario? Or will it be one of those periods where the Fed can hike rates and then the economy just slows down a little bit, but doesn't go into a recession? Can we maintain earnings 20% above the long-term trend indefinitely? That's why I'm having a hard time getting excited about buying equities right now. Even though we might get a tradable rally here, can't really see this idea of a return of the bull market in January happening. Could it happen? Absolutely. But there's certainly some risk here that I think is worth paying attention to. And this is, and really, we've had 3 years of really spectacular asset performance on a macro level, right? 2019, 2020, 2021. Even though you had a brief little 30% drop in assets in March of 2020, you quickly recovered all that because of massive intervention. So on the macro basis, you've had just phenomenal returns out of equities the last 3 years, which are, somewhat unsustainable. And so you kind of start to understand that, feeling a little bit anticlimactic about 2023 without those tailwinds, right? You don't have quantitative easing. You don't have zero interest rates. You don't have government stimulus checks. You don't have, a strong economy. It's just something to pay attention to. Okay, we'll come back. Look, we'll, like I said, nobody really wants to talk about markets anyway right now. So we'll come back and wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. All right, get ready to wrap it up here. A couple of things, as we head into, as we were saying, heading into next year, there's certainly some concerns, economically speaking. Here's in Yahoo Finance this morning, in their morning commentary, they had some comments from various CEOs of different companies. United Airlines CEO Scott Kirby, he is seeing pre-recessionary trends in his business. Demand is still strong, as we saw in Delta's guidance last week, but forward-looking bookings are softening. So in other words, people having to start to cut back on travel here a bit. Costco, of course, one of the companies we're long in our portfolio. Love that company. They're about to raise their membership fees, which is a beautiful thing. Talk about a cash business, right? That's like 100% margin business issuing out those cards, right? Come shop at Costco, get a $1.50 hot dog, slice of pizza, vanilla ice cream, go shop, right? And pay $119 for a membership fee, and that's going up. So Costco is seeing mixed sales trends in larger ticket discretionary categories such as TVs and jewelry. Right? It's exactly kind of what you would expect. Where you're going to cut back. Right? A lot of people had extra cash in 2020, 2021 because of stimulus checks, right? Hey, just got a stimulus check. Think I'll run down to Costco, buy me a new 85-inch television to watch the Super Bowl game, right? Well, first of all, two things happen. Once I bought a television, I don't need to buy another one for a while. Right? And two, I've spent the cash. So now I'm back to kind of pre-sales of where we were in TVs. But those are starting to soften. Same thing with jewelry. Got a bunch of extra cash. Been wanting a new watch. New bracelet, right? So starting to see those things reverse. Specialty apparel retailer Express disappointed investors this month in its results and outlook. CEO Tim Baxter struck a much more cautious tone than the norm, talking about slowing sales trends. VF Corporation, which makes products like Timberland, North Face, Vans, Dickies, they warned on results heading into the kind of the shopping days, right? Just here we are at Christmas. This is the time that, people are buying that kind of stuff for Christmas gifts, etc. And warning of, much softer sales on those items. Lululemon's fourth quarter guidance a few weeks ago back fell well short of estimates, but of course, that's a function of a fact that they're a very high-priced retailer. So, do I need to buy Lululemon? No, I don't need to. I can buy stuff of, lower price, and that's where we're seeing shifting trends, right? People are having to start to cut back on those higher dollar cost products. November retail sales report last week, of course, was a total bomb, which really kind of reinforces what Lululemon said, what VF Corp said, what Costco was saying. Retail sales were down much more than expected. And again, remember, retail sales are down on dollar volume, right? So that's one thing. But the cost of goods are higher, which means that actually that report was worse than what the headline said because people are buying less and they're even buying less in dollar volume now. So as we talked about before, be careful with those retail sales numbers because people are spending more to buy less. Now they're spending less to buy even less, right? So that's why you're seeing these other trends show up in these retailers' reports. And as we go further into Christmas, this is going to be the Christmas to remember, so to speak. Once we get on the other side of this and we can look back and see what retail sales were for the Christmas shopping season. Again, a lot of people just now getting their shopping done. I haven't done mine yet. I'm waiting for the last possible minute, procrastinating as much as I can.
Why don't you take Wednesday off and take care of that?
I might have to do that.
Yeah.
I just need to get over to AutoZone and buy my wife a pair of jumper cables. So, by the way, she was listening the other morning when I made that comment.
Yeah.
I got
a charge out of that.
Yes, she did. If he doesn't hear the joke, I said I was going to buy my wife a pair of jumper cables because she's always trying to start crap.
So how is the couch these days?
The couch is great.
Yeah.
Yeah.
Morning, Christina.
Yeah. Big name retail stocks, Walmart and Target have underperformed the S&P. And of course, one of the big, issues will be, and those are going to be kind of the two real key ones to watch. Now, next week, also, we have Nike's reports. That's going to be really the bellwether for retailers because that's going to come right after Christmas. And so we're going to get really kind of first glimpse at what Christmas looked like. If you didn't get a pair of Nike shoes for Christmas, maybe telling you something. So we'll kind of get that first, kind of hurdle as a litmus test, so to speak, come Tuesday when we hear Nike's earnings. So, again, these are the kind of the things to be looking for. Thanksgiving was a bit weak, and, it's very likely we'll see Christmas a good bit weaker. And that's going to really set the stage for whether or not this rally has legs and how much legs that it has in terms of a Santa rally. Of course, it's also setting the stage for next year. Again, the big debate going into 2023 is going to be recession or not. Now, all I can tell you is that this morning, markets are pointing higher. Dow's going to be up about 59 at the open. NASDAQ's up about 40, 50 points this morning. S&P's up about 10 or so. That probably won't last because every time I go on Fox Business, the market crashes. I don't know why it is, but it's just the way it is. And I'm doing Fox Business today at about 1:35 our time.
Central Time. Mark your calendars, folks.
So between 1 o'clock and 1:35, don't be in the markets. I don't know why it crashes every time I go on Fox Business, but... And I'm generally bullish on Fox Business, right? I try to keep a bullish spin because that's what Charles Payne likes. But,
it's the Lance Roberts effect.
It is the Lance Roberts effect. Everybody's like, oh, my God, Lance is on again. Sell! Sell, Mortimer, sell! Lance is on Fox. Anyway, that's what happens. There's some things that I think people should know by now. In September 11th, we have the attack on the World Trade Center. We began to lock down the world, right? so to speak, because of terrorism. And we supercharged the TSA with all kinds of powers, to make sure that bad people don't go on the airplanes, right? And I would think by now that most people would understand you can't take a loaded gun on an airplane. But apparently that message has evaded some people. This is a report from TSA. The Transportation Security Administration is out with a new report showing that TSA officers at airport security checkpoints seized a record number of guns in 2022. As of last Friday, and this is no small, now how many guns would you think, right? Like 50 guns, 60 guns, maybe? Most people figured it out by now that you can't carry a loaded gun on an airplane. No, we're not talking 50 or 60 guns. We're not even talking a couple hundred guns, right? As of last Friday, TSA agents found 6,301 firearms, with more than 88% of them loaded, surpassing the previous record of 5,972 guns detected in 2021. Closing out the year, the agency expects a total of 6,600 firearms to be seized, a 10% increase over 2021's record level.
What, are people just forgetting that it's in their luggage or what?
You pack a carry-on. So you're going, I need my toothbrush, I need my toothpaste, I need my deodorant, I need some underwear or socks, I need a snack, and a gun. Wait, you pack your carry-on.
Yeah.
Right? You don't just kind of forget about it.
Yeah.
Just like, I forgot I put my gun in there. I was just, silly me. Statement from TSA. Firearm possession laws vary by state and local government, but firearms are never allowed. This is your public service announcement if you're planning on traveling for Christmas to grandma's house. Firearms are never allowed in carry-on bags at a TSA security checkpoint, even if the passenger has a concealed weapon permit. Do not bring your gun on an airplane. Maximum civil penalty is up to $15,000 plus the loss of the gun, which is not cheap. So unless you just like throwing away 15, 16 grand, try to get your gun on an airplane. Now, here's the only question. TSA is notorious for not catching a lot of stuff.
Well, there's that. Yeah.
So if there were 6,000 guns that they found, how many actually got on the airplane?
Right.
That's the other question.
That's the story.
Firearms are prohibited in carry-on bags at checkpoint and onboard aircraft. When a passenger brings a firearm at the checkpoint, this consumes significant security resources and poses a potential threat to transportation security. Please do not bring your guns on airplanes, quote-unquote, TSA Administrator David Pekoski. It's pretty amazing. Now, if you want to take your gun with you, that's okay, right? You can take your gun. It just has to be in checked baggage, in a hard case container, right? You can take your gun. If you're going to grandma's house to shoot a reindeer, you can do that. Just pack your gun properly and check it through your checked luggage and pick it up when you get to the airport where you're going. It's okay to do that. Just don't take it on the airplane. People, it's not difficult to follow the rules. Anyway, that's it for today. I told you, I was tired of talking about the market anyway. We'll be back tomorrow. We'll see how the market does today. I'll give you an update tomorrow on what to do. Be sure to go by the website. Our latest newsletter is out talking about the rally this past, coming up, the Santa rally a bit, and the potential for recession next year. That's all on the newsletter right now on the website, realinvestmentadvice.com. That's realinvestmentadvice.com. See you back here tomorrow.